We know from Google Trends more people are searching buy Bitcoin than they're searching for buy gold. Everyone's talking about Bitcoin. We have PayPal's CEO who says fintech will change more in the next 5 years than all of financial technology has done in the past 30. And at the same time, Tim Draper says people will laugh at you if you're even using fiat currency in the next 5 years. Maybe what these business leaders are seeing is that traditional fiat currencies are bounded by country borders. Or maybe that they're seeing that losing 1.4% switching between currency conversions is a waste. And that happens to underline the fact that remittance fees are even higher than that, switching between different currencies. Maybe this is why Deutsche Bank says that this could be the end of fiat money. And maybe this is why the world is looking to cryptocurrencies as both a store of value and as transfer agents. And maybe this is why fiat money may soon disappear. Let's discuss. Hey everybody, my name is Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So there's a lot going on in this world. A lot of people are talking about Bitcoin, blockchain technologies. We are seeing the markets go up in a lot of different areas. Then we're seeing the markets go down in other areas, as markets so often do. Thanks for showing up. Hit that like button if you appreciate this content, appreciate the news, appreciate the perspective of what's happening in the world, and just our efforts at bringing people together and bringing you that information. I just wanted to, just point out that look what's going on. This continues to happen immediately when these videos are posted. Here was the other video from the other day, and after some views, it gets not suitable for most advertisers. This kills us in terms of not even the revenue, but in terms of the visibility and the placement of these videos getting visibility for people who are searching for these key terms, right? Who are trying to find this information. And we go through here and we request that these that get reviewed, and we get these reviews requested, but they don't even really look at these requests until it hits 1,000 views in the past 7 days. And by that point, people have moved on and then aren't really interested at looking at the old information because everything is changing so rapidly. And, looking into the video, check this out. We use this video analytics plugin called TubeBuddy. If you're a YouTube creator or interested in getting additional data behind the scenes, there's a couple different plugins out there. So this is TubeBuddy right here. And you can see that so there's a whole $1 in earnings after putting hours and hours and hours into each of these videos. But our engagement rate that Google is letting us see, that YouTube is letting us see, is over 15%. Like ratio over 97%. Moving down here to see if we're ranking any of these keywords. Ranking number 8 for BTC, ranking number 14 for Bitcoin meme pool, ranking number 8 for Bitcoin war. Just these videos aren't getting the visibility. They're getting demonetized. The problem is real, and it really hampers and damages the ability to show you what's going on, to get you this information, to and just give a little bit of commentary. So what do you think about this? Are you recognizing this problem as well with other subscribers or channels, or are you a content creator? Do you recognize that as the same sort of problem? Let me know. But let's jump into the market. So looking into the market, we are still living in a world of market cap, total market cap, all cryptocurrencies over $220 billion. Past 24-hour trading volume, huge at $9.7 billion. BTC dominance, very strong still, over that 50% mark at 56.4%. Currently, Bitcoin price $7,400 a coin. Bitcoin Cash dropping pretty significantly in the past 24 hours, 20%, as people are really moving back into Bitcoin BTC, back into Ripple. So it might be some bank money moving in. 24-hour trading volume into Ripple is only $461 million, while we have trading volume for Bitcoin 4 billion and Bitcoin Cash 1.9 billion respectively. Other tokens that are doing well in the top of the charts here are IOTA, NEM, let's see here, EOS, H-Share. Yeah, a lot of interesting coins out there in the space. So there's been a lot of ups, there's been a lot of downs, there's been a lot of people who are saying a lot of bad things about Bitcoin and blockchain technology in general for the entire space, let alone the fighting and the infighting that's been going on between Bitcoin BTC and Bitcoin Cash. And so this was an interesting meme where, we got these guys on these horses just, saying that they really can't wait until this fad is over, right? This fad of these cars. And what's going on is that Bitcoin is just gaining in market strength. It's gaining in popularity. All of blockchain technology is gaining in strength, gaining in popularity. This is why Bitcoin continues to grow. This is why Bitcoin Cash at this point is going to continue to grow. And each of these technologies that are doing very, very strong, like Ethereum, like Litecoin, like Dash, like Monero, these are going to be increasing in value as the total market capitalization increases and this money continues to go into Bitcoin and continues to go into Ethereum. It's going to seep and trickle down into each of these other tokens, because it's not like these are just some sort of company where these can just go away. These tokens, each of these tokens are going to exist forever. It doesn't matter if you're talking about Trump coin or Cage coin or whatever it might be, all of these things exist and they're going to continue to exist forever. And so as we're watching these markets and we're seeing these markets go up and down and people are saying good things and people are saying bad things, these swings are going to probably get even more volatile as more and more money enters the space. As a lot more money enters the space, there could be huge swings up, huge swings down as more businesses, corporations have access to investing into Bitcoin and different cryptocurrencies and using different investment vehicles and investment financial vehicles, let it be futures trading or different types of derivatives trading or just all sorts of different contracts, buying and selling the price based in units or adding Bitcoin as a part of a portfolio on a mass scale. Say like half of everybody at IBM starts adding Bitcoin into their 401ks. Once we have that Bitcoin ETF, these swings and these dips in the market are going to get gigantic, gargantuan, humongous, ginormous. And when that happens, we want to recognize the market's going to go up, the market's going to go up, and the market's going to go down. And when the markets do go down, that's when we want to buy, not when the markets go up. Not that any of this is financial advice, but it's just personal observations that we're noticing in all of markets. And so, this has been a lot of people on Facebook. I've been noticing a lot of people talking about buying the dip, waiting to buy the dip, and then waiting too long to buy the dip, and then the dip goes away, and then the dip is no longer a dip, and then we're on our way back up past 7,000, past 8,000, past 9,000. And so that's definitely the risk of, essentially dollar cost averaging, right? And just having a little bit in the game and continuing to position yourself as everything continues to go up. Because everyone is talking about this and everyone is moving forward with this, and the traditional folks. And here we have Mad Money's Jim Cramer, who's announcing that Square and Square Cash is going to be getting involved in Bitcoin and allowing people to use the Square Cash app to buy and sell Bitcoins. And Square is sort of neutral in their voice, but they're very bullish in their actions. And what they also say, though, is that they're very interested in how the Square Cash is going to be able to allow many more people across the world to have access to capital, access to banking, access to money, access to wealth in a way that brings them equal with essentially everybody else in the world. The only part of that that's not really true is that the people who get involved sooner are going to be in a better position than the people who get involved later, assuming that this whole cryptocurrency market is really headed to the moon. So you could go check out this video. We're going to be doing a separate video about Square Cash and what's going on in this space. So stay tuned for that. And so it's not just Jim Cramer who's been wrong about a lot, but here we have an article from Deutsche Bank who says the end of fiat money may be near. And so this top strategist is speculating that we may be looking at the start of the end of fiat money. And Deutsche Bank strategist Jim Reed envisions that the current fiat monetary system could begin to collapse well within the next decade. And so what could happen is that this could create a climate across the world that could be encouraging a new alternative currency system. And lo and behold, a new alternative currency system already exists in the world of Bitcoin and decentralized technology. Although we're definitely already seeing the beginnings of, shifting blockchain technology into distributed ledger technology so that the countries can continue their own fiat. But that would really just be creating the same problem with the new technology instead of moving forward with the solution that currently exists with the decentralized tokens that are out there. And so the current fiat monetary system, which began in 1971 when U.S. President Richard Nixon decoupled the dollar from gold, it's what this strategist at Deutsche Bank is saying is that it's inherently unstable and prone to high inflation because of the way that the economy is structured, and that these corrosive effects have been masked in the major economic markets, primarily due to the growth of China's economy, the growth of the working age population, as well as stimulus and quantitative easing coming from governments and central banks that are creating these problems to begin with the way that these systems are structured. So there's this quote here that says, it's not usually this easy that as inflation would normally have increased with such stimulus and credit creation. And in fact, it could be argued that this external disinflation shock has perhaps saved the fiat currencies. But while it's saved the fiat currencies, it's really set up the fiat currencies for even greater risk down the line. And so what happens here is that this creates the opportunity for alternative currencies, and central banks may be seriously considering a shift to a commodity-backed monetary system within the next decade. And we see Russia already moving in this direction. We see the Federal Reserve within the United States already inquiring how they can make payments faster and getting answers that could be done with cryptocurrency, blockchain technology, and distributed ledger technology. And so Bitcoin advocates believe that the emergence of the digital age creates the necessity of a digital currency. And Reed says that it's possible that cryptocurrency or another alternative medium of exchange could eventually supplant the paper money. And so this is just recognizing that it could be cryptocurrency or it could be another alternative medium. And this is something that we should be aware of, that we should keep an eye on, of this another alternative medium of exchange, which could be being worked on or could be imposed within the next couple of years as the technology continues to grow. We don't know what we don't know. So although the current speculation and the interest in cryptocurrencies is more to do with the blockchain technology than a loss in faith of the paper money, that's really depending on who you ask, there will likely be some medium of exchange that becomes more universal and a competitor of paper money, which is what this Deutsche Bank strategist Reed concludes. And so separate from Deutsche Bank, not only from Deutsche Bank, but we also have Tim Draper. Tim Draper, who's a venture capitalist who's invested in several different companies across the world and throughout Silicon Valley, famous for purchasing the 30,000 Bitcoins for under $20 million, which in, roughly today's value is over $200 million that he got for 20 million. How's that for 10xing your money? And so Tim Draper is saying that in 5 years, if you're still using fiat currencies, that they're going to laugh at you. This is essentially, reiterating what we just heard from Deutsche Bank. And Draper's DFJ Venture Capital business, corporation, investment firm, has long been bullish on Bitcoin. Long been, vocalizing good things about Bitcoin on the news, saying good things about Bitcoin, giving accurate predictions about the increases in price of Bitcoin, leading the charge from someone who's respected since they've been right in traditional financial markets for so long in the past. And, but then again, making over $200 million on a $20 million investment would make anybody bullish about Bitcoin, Ethereum, and almost any different cryptocurrency. And Draper is definitely bullish. And fiat currencies, he says, are bound by country borders. And that is a risk of fiat currency. That is not a benefit of fiat currency. Separately, we have the TNG FinTech Group CEO Alex Kong, who told Draper that losing 1.4% between switching between currency A and currency B is fairly standard. Well, it must be nice for Alex Kong that 1.4% is fairly standard, because other people across the world who don't make billions and billions of dollars or hundreds of millions or millions or hundreds of thousands, most people are paying, if you're lucky, 3%. And then if you're doing it in person, and then if you're not lucky, you're paying probably 10%. Sometimes converting that value, and also the remittance fees that go along with sending that. And so Draper says that we're looking at cryptocurrencies as a store of value and as transfer agents. Cryptocurrencies as storing the wealth long term, keeping it valuable long term, unlike the fiat currencies from the countries of old, which continuously lose their value every 100 years. And then also as transfer agents to be able to transfer value from point A to point B. It's all one and the same. And they're going to interrelate. It's all going to be connected. And everything is going to be optimized for whatever currency has the most value for all the different currencies in your wallet. You might have one wallet and it has all these different currencies that are just in that one wallet. And if you go to Starbucks or if you go to pay your rent, then the payment will happen in using the currency that's most efficient to pay for that good or service that you're seeking. And this is the future that Tim Draper is seeing. This is the future that he's envisioning. And he's seeing that if someone wants to pay with fiat currency, that's going to be just a not desired scenario. And Draper thinks that the technology and smart marketing is going to abstract away the complexity, because although everything is really complex now and people aren't believing in the technology or having faith that it's going to hit mass adoption, just like people didn't have the faith that it was going to hit that the internet was going to hit mass adoption, the faith that people were going to buy a pair of shoes or a shirt online because they weren't going to be able to feel it or they weren't going to be able to touch it. And now people say, just buy all 3 pairs of shoes and then just send back the ones that you don't like, and who cares if the credit card information goes in the computer. But there was a time when nobody or almost nobody believed that was going to be the case. Tim Draper is seeing a future where everyone is going to have these digital wallets, and the smart technology and the smart marketing is going to make it so seamless and so simple that essentially your parents or your grandparents are going to be able to do this. He goes on to say that if it doesn't get simplified, it won't get adopted. Good marketing people will simplify all use of these things, Draper says. And we might have a John coin, and we might have a Tim coin, and we might be trading those in real time, putting a value on our time and putting a value on our attention. Because ultimately, that is what is most valuable. It's not gold, it's not dollars, it's not Bitcoin. The most valuable, object or commodity or currency in the world is time and our attention. When I'm making these videos, this is taking away time and attention from other work that I have, from other hobbies that I have. This is taking away time and attention from my family, my children, and whatever you're putting your focus on, whatever you're putting your time and your attention into is taking away from other areas of your life. And so it's very, very important that we recognize that the most valuable commodity we have is our time and our attention. And ultimately, that's what the Bitcoin, the blockchain technology is all about, because it's about, storing our value, storing our wealth that we've worked so hard for, and then having units of exchange where we can trade one thing for another to get what we want in value of our time and in value of our attention. And so we can put our time and our attention in areas where it really matters. So that was Deutsche Bank, that was Tim Draper, that was a lot of people, but we also have the PayPal CEO who says fintech is going to change more in the next 5 years, just as Tim Draper was saying that people will laugh at you in 5 years if you're still using fiat currency. The CEO of PayPal is saying that fintech is going to change more in the next 5 years than financial technology and the financial industry and the technology industry has done in all of the past 30. And so he says that millennials are changing the shape of many industries, in particular the financial sector, and that we have to reimagine how money can be managed and moved, because there's going to be so much more change in the next 5 years than has happened in the past 30, and that the millennial generation, those under the age of 30, think about these everyday processes such as payments differently than older generations. And so they think about payments differently, they think about communication differently, they think about connection differently, because it's just a different world that people under 30 are living in than the people who are, between 30 and 40. And just like it's very different between the people who are between, 40 and 50. Just the way the technology has been integrated with the society, let it be TVs and radio, let it be computers and internet, or let it be the prevalence of social integration, digital integration across every aspect of our lives. I can't imagine what it's going to be like for our children or our children's children living through, Bitcoin and blockchain technology in just 5 years away, when people will laugh at other people if they're using paper money or wonder why they're using that because it loses value so quickly. So with Venmo, they put a tag or emoji on one of their payments. It's not really a P2P service. It's a social payments experience. And so it's not really a service. It's still another integration with the lives that millennials are seeing with payments, and realizing that it's not just a transaction, it's really a relationship, and it's so much more. It can be personalized. It can be fun. It can be efficient. It can hold value. He also thinks that by 2020, the online payments, digital payments business will be valued at more than $8 trillion, and that's up from its current $3 trillion. It can actually be up a lot more than that, because when he talks about the digital payments business being up $5 trillion in the next 2 years, he's talking about digital payments in the form of PayPal payments. He's not even fully considering the digital payments that could be presented in the form of cryptocurrencies, because, while we're talking about this article, this article does not mention Bitcoin at all. This article does not mention cryptocurrency at all. So while he's talking about digital payments, we got to recognize that the context that his quotes are coming from, the context of this website, cryptocoinnews.com, is cryptocurrency. So that might make you think that he's talking about Bitcoin, but when he's talking about digital payments, he's actually not talking about Bitcoin. He's not talking about cryptocurrency. He is talking about traditional fiat money, traditional payments, but in the digital context, as opposed to cash, as opposed to checks. And so when he says from $8 trillion to $8 trillion from $3 trillion in 2 years, that is, in my opinion, without him considering the ramifications of digital technology, Bitcoin, and the like. So so that's super interesting. There's a lot going on there. We're just seeing more and more and more. Let it be what's happening with Square. Let it be what's happening with Deutsche Bank. Let it be what's happening, what we're hearing from Tim Draper. Let it be what we're hearing from PayPal. A lot of these predictions are coming out in the next 2 years by 2020. Other predictions are coming out to say in the 5-year mark, which really puts us at 2022, maybe 2023. The next halving of Bitcoin is going to happen in 2 years in 2020, in the summer of 2020, so about 2.5 years, let's say. So there is a lot happening. There is a lot going on. I really appreciate you coming to check out this information with me. This takes a lot of time. This takes a lot of my attention, and I am just so filled with excitement that I am just really happy to share this with you. And I'm very grateful that you share your time with me. And, with that being said, if you'd just be willing to hit that like button, comment on this video, because it really does help other people find this information. It really does encourage me. It really does encourage all of us to come together and to continue building what we have here and connecting with other people who share the same values of bringing people together and sharing information and having everyone be part of the revolution that's happening with finance and technology that is going to affect every single industry across the world. I am just very, very excited. Feel free to check us out on mintingcoins.com. Feel free to make give yourself a membership. If you'd like a free upgraded membership, then just shoot us an email. We'll upgrade you for free. Otherwise, like this video. Check us out on Steemit. We have a lot of other videos that we are working on. We have a lot coming down the pipeline. We are working on getting our video back up and running. And until then, I'm glad that together we are minting coins.